Hey guys! Your girl Sue here once again. I am so excited at what we have to share today. SoFi is about to change the game again. What if the next trillion-dollar opportunity isn't a new stock or startup, but the rebuilding of the entire financial system on code? Because right now, Wall Street's elite, from BlackRock to Fidelity, aren't just watching crypto anymore. They're building with it. And the keyword on everyone's lips? Tokenization. Tokenization means turning anything, a building, a bond, a startup, into a digital asset you can trade 24/7. Each token is a piece of ownership, recorded on a blockchain. No paperwork, no gatekeepers. Just code, consensus, and instant settlement.
It's a big day and a big milestone. Reverses the course of time.
It does.
We've wanted to be a one-stop shop for all your financial services needs, and one of the holes we've had for the last 2 years was in cryptocurrency, the ability to buy, sell, and hold crypto. We were not allowed to do that as a bank. It was not permissible. But in March of this year, the OCC came out with an interpretive letter that it's now permissible for banks like SoFi to offer cryptocurrencies. So this morning we're launching, as the only national bank, the first and only national bank, the opportunity to buy, sell, and hold cryptocurrencies like Bitcoin, Ethereum, and Solana.
We're the only digital bank that can offer crypto, stocks, banking, and stablecoins in one app, Noto told CNBC. In hindsight, the pause was not a retreat. It was a setup. Now, with institutions racing into tokenization, SoFi's crypto positioning is right on time. But tokenization isn't just about stocks or treasuries. What if you could trade on truth itself? That's what Polymarket and MetaMask are doing, bringing prediction markets to your crypto wallet. You can now bet on elections, inflation forecasts, even Fed policy, all tokenized. It's not just investing. It's tokenizing human belief, probability, and intelligence. Tokenization means turning anything, a building, a bond, a startup, into a digital asset you can trade 24/7. Each token is a piece of ownership, recorded on a blockchain. No paperwork, no gatekeepers. Just code, consensus, and instant settlement.
I think the really exciting space at the moment is actually tokens. So I know a lot of people think that the token space is crazy and it's full of scams, and all this is true. But I think the more time I spend in that space, the more convinced I become that a regulated token environment is going to be huge. All sorts of financial assets will move into that space. The shifts to tokenized asset trading are just huge.
Much more efficient, perhaps, to have a tokenized security than some other sorts of things, but we need to make sure that we have a level playing field, that people are certain how to go forward. So that's going to be unfolding as we address these issues.
So I'm going to be focusing on that this year.
And that is something you have seen with your client. I mean, you move into this financial industry a lot, and you see that serious bankers and serious funds and serious investment people are really thinking about tokenizing everything and making everything more liquefied.
Very, very serious. Yeah, this isn't coming from the technology guys. This
So there are different ways to tokenize things. And so some of that will be, you compare it to, say, a mutual fund or an ETF. So the ETF is still a security, even though it has securities also in it. It's a basket of securities. So that's the similar thing with a tokenized asset. And but we need to make sure that the rules that apply for disclosure and issuance and all that can accommodate, the special features of tokenization.
For years, big finance scoffed at crypto, but now BlackRock, Fidelity, JPMorgan, and even the SEC are on board. Larry Fink met Coinbase CEO Brian Armstrong to map out how to bring all assets, stocks, bonds, real estate, on-chain. Meanwhile, SEC Chair Paul Atkins went further. All U.S. markets could be on-chain within 2 years. Let that sink in. So why now? Because macro is shifting. The Fed ended quantitative tightening in December 2025. Rate cuts are coming. Liquidity is back. And institutions are accumulating crypto like never before. Plus, Ethereum just upgraded again. With Fusaka, the network now supports 100,000 plus transactions per second. And it's adding compliance features for big institutions. We're not just talking about a crypto renaissance. We're talking about the rails for the next financial system. So as fund managers double down on crypto, as Ethereum becomes Wall Street's preferred platform, and as apps like SoFi quietly bridge TradFi and DeFi, one thing is clear. The future of finance won't be built on Wall Street. It'll be built on chain. Thank you for watching. See you next time. Ciao.